there was a big sell-off. Silver dropped back down below 49 after trading above 51. So there was a lot of people that sold the new high. Trump revealed that the new tariffs on China are another 100% in excess of the tariffs that are already in effect. There's now another 100% on top of that. And I guess 4,000 is such a big number that, they kind of had to talk about it. Now, they'll probably stop talking about it in a few days, right? Because, it'll be old news. Maybe they'll talk about it again when it hits 5,000. I don't know.
In today's news recap, gold jumps above $4,000 per ounce again after Trump's tariff warning on China. Gold popped back up above the 4,000 an ounce level on Friday, set for an 8th straight weekly gain after U.S. President Donald Trump's warning of possible fresh tariffs on China accelerated a flight to safe haven assets. The metal has gained 3.2% so far this week. Non-yielding bullion, which hit a record high of $4,059 on Wednesday, is traditionally considered a hedge during times of broader uncertainty. Geopolitical risks alongside strong central bank gold buying, exchange-traded funds inflows, U.S. rate cut expectations, and economic uncertainties stemming from tariffs have all contributed to gold's rally. U.S. President Donald Trump said on Friday there is no reason to meet with China's President Xi Jinping in 2 weeks in South Korea as planned. The U.S. is calculating a massive increase in tariffs on Chinese imports, he said in a Truth Social post. Trump's post has seen stocks collapse 1% in minutes and gold surging back above $4,000, said Tai Wong, an independent metals trader. Heating up the trade war again will tank the dollar and be good for safe havens. Markets are also closely monitoring the risks related to the potential collapse of the French government and the ongoing government shutdown in the United States. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Now, there was a lot of concern the prior day that silver would not get above 50 because the silver stocks actually were weak on Wednesday because I think traders were expecting a decline. And then when we got the huge gap up on Thursday, all those silver and gold stocks gapped way up. But then we got the sell-off from the higher level, and gold and silver stocks had one of their worst days of the year, maybe of the bull market. Silver stocks in particular, on a day that silver traded above 51 for the first time and closed above 49. It was still a strong positive close, just not above 50. You had a lot of silver stocks down, 5 to 8%. So they got clobbered. And again, that just shows you how nervous investors are and how quickly they run for the exits on any sign that, oh no, maybe there's a top, maybe there's going to be a correction. So far, nothing indicates to me that that is the case, especially considering the fact that silver recovered and closed really, I think, above $50 on the week. This is the highest daily close ever for silver. It's the highest weekly close ever for silver. I think the same for gold. This is the highest gold has ever closed a week. In fact, it's never closed above 4,000. And, now it's closed a week above 4,000, not just the day. And the gold stocks were actually down a bit, most of them. The GDX was down about 2.5% on the week, although the GDXJ managed to eke out a small gain on the week. But all of this was the result of the big drop that we had on Thursday. Now, you would have thought that maybe the gold and silver stocks would have recovered some of that drop today, but I think the overall carnage in the stock market prevented that from happening. The Dow had one of its worst days of the year, down about 880 points or so, 878 points. That was almost a 2% decline on the day. The Dow down 2.5% now on the week. The S&P, though, was down 2.7% today. Russell 2000 down 3%. Big down. The NASDAQ was down about 3.5% on the day, 2.5% on the week. In fact, the NASDAQ hit a new all-time record high today on the same day that it was down 3.5%. That is an outside reversal day. The NASDAQ took out yesterday's high and then not only took out yesterday's low, but closed below yesterday's low. And in fact, it did the same thing on a weekly chart. The NASDAQ took out the high from the prior week and then closed below the low from the prior week. So that is a bad sign for the NASDAQ that a bigger decline is coming. The catalyst for this decline was Trump getting tough on China.
In today's news recap, festive buying props up demand in India, China muted in post-holiday trade. Physical gold demand in India held firm this week despite a record-breaking price rally as jewelers and investors snapped up bullion ahead of key festivals later this month, while buying in China was subdued in post-holiday trade due to higher rates. In Hong Kong, residents rushed to sell everything from gold bars to rings to cash in on the record price rally. Spot gold prices rose above $4,000 per ounce for the first time on Wednesday as broader geopolitical and economic uncertainty and U.S. rate cut expectations boosted bullion demand. Indians will celebrate Dhanteras and Diwali this month, festivals during which buying gold is considered auspicious and which are the busiest bullion buying days in the country. Investment demand is really strong right now, expecting prices to rise further. Investors didn't mind paying extra, even over record high prices, said a Mumbai-based bullion dealer with a private bank. People are investing in gold bars and coins as safe havens, but jewelry demand has been low. People are looking to buy, but they are waiting for prices to come down, said Peter Fung, head of dealing at Wing Fung Precious Metals. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
So we got more than $50 above 4,000. I think, gold was up better than $70 on the day at its high, although it closed off its high, maybe up about $50, $55. And as I'm recording this podcast live on Wednesday evening, gold's down another $23 in early Asian trading. So it's trading back below 4,020, but it's still holding above 4,000. Now, look, obviously, gold could go back below 4,000. I mean, that's not some kind of line that can't be crossed. And it's hard to say whether or not we're going to have a pullback from here. I mean, certainly the market is due for a pullback. I mean, we've come a long way. In fact, year to date, the price of gold is up 54%. I mean, that is a huge move. First of all, the year's not even over yet. We still have most of the fourth quarter left. But the last time gold was up this much in a calendar year was the 1970s. Now, that was a very significant time period. And by the way, silver rose today by an even greater percentage. It actually traded above $49.50 at the high. As of this morning, or right now, it's back below $49. I think it's trading around $48.80. But the intraday high, it got above $48.50. I mean, $49.50. So very, very close to $50, which is that key level for silver. But if you have to go back to the 1970s to find a year where gold was this good. And of course, it's not like gold had a bad year last year. Gold had a great year last year. It's just having an even better year this year. And of course, a 54% move from where gold was, dollar-wise, is a much bigger move. Think about the value of that move, because you're talking about a metal that's already, mid 2000s and moving up to 4,000. That's a big dollar value of the rise in what all the gold is worth. But if you've got to go back to the 1970s to find something like this, that probably means that what is happening now is likely as significant as what happened then. Now, what happened in the 1970s? You got to understand this, because it was 1971 that Nixon took us off the gold standard. It was supposed to be a temporary move, but it's now been better than 50 years, and we didn't go back on it. But that was a very significant development, because up until 1971, if central banks in Europe or anywhere held U.S. dollars in reserve, which they did, they knew that whenever they wanted to, they could take those U.S. dollars back to the U.S. government and exchange them for gold. It was a fixed rate. If you had $35, you had an ounce of gold. The Federal Reserve note was basically a receipt that paid the holder of that receipt an ounce of gold. You had $35, you could turn them in, and you could get an ounce of gold. Now, in the meantime, you could take those $35 and buy U.S. Treasuries and earn interest, which is something you couldn't do on your gold. But by allowing the Federal Reserve or the U.S. government to hold your gold, which is basically what the world was doing, right? We were the custodian of the gold, right? So Germany or Italy or France or the UK, they hired the U.S. government to hold custody of their gold. And we issued them a warehouse receipt in the form of U.S. currency that represented, a pay to the bearer on demand. Now, of course, at one time, everybody, right? You didn't have to be foreign to convert your paper into gold, right? The initial Federal Reserve notes before 1933, right, were redeemable in gold by everybody. So an American citizen that had $20, because back then the official price of gold was $20. So if you had a Federal Reserve note for $20, you could take it to the Federal Reserve and they'd give you a $20 gold piece, right? It was an even exchange. So that piece of paper represented an IOU for gold. In fact, that's what gave the paper the value. It was the gold that backed it up. Now, 1933, after Roosevelt, told everybody that to turn in their gold and made it illegal for Americans to own gold, Americans couldn't convert their notes into gold. But foreigners could. Right? It was only American citizens that couldn't get the gold.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.